Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Wednesday, April 20th, 2011. This morning I'm talking about the markets defying gravity. And, we talked yesterday about, the S&P changing their outlook to negative on markets here in the U.S. based on what's going on with the debt and all these other things. And it looks like the market's basically shaken those off and said, yeah, okay, whatever. This morning and yesterday we've got market rebounds going on across the board. Stocks are higher, commodities higher, dollar weakness. We've got risk-taking in the currency market. And everybody appears to be carrying on like there's no risk out there. So interesting stuff. So I'm just going to jump right in here. Take a look at the Aussie. You can see on the 30-minute chart. All right, just in the past 2 days, Aussie made a tremendous move higher here. We're approaching 107. All right, when we broke the resistance here at 105.75. Just want to show you Euro here real quick. All right, Euro rebounded here. Right down here was that S&P change in the outlook. All right, settled in above 142, and here we are back trading to new highs above 145.25, which had previously served as resistance. All right, so in the Eurozone, we saw that German PPI came in slightly lower than expected, which is a good thing for the ECB watchers who are afraid of further rate hikes. And the story is being floated that perhaps they were a little bit aggressive starting the rate hikes. So there may be some thoughts out there that they're not going to continue. So that's a constant battle of words going back and forth, determining how we're going to do with the rate hikes over there in Europe. So in Australia, we just looked at the previous chart of the Aussie. Okay, look very similar. This is all showing you dollar weakness. All right, in Aussie, export and import prices were higher, and the Westpac leading index came in slightly better than expected. So we just want to show you that. You can also see that there's yen weakness. All right, here's dollar yen, but we can just look at Aussie yen, CAD yen, you name it. Yen weakness happening. All right, exports took a big hit in Japan overnight. They're showing that the trade balance came in much lower than expected, 196 billion yen. All right, so that was on lower exports, which declined 2.2%. I'm sure some of that is going to be blamed on the earthquake that they saw there, but you've got these supply chain disruptions, and they've got a little bit of work to do over there in Japan. So we've got definite yen weakness taking place. Okay, I also want to show you the pound. All right, pound's pushed back up higher, but it's still sitting just right about that resistance ahead of 164. Now, the Bank of England released the rate policy meeting minutes this morning, and nothing changed there. Still vote 6-3 to keep policy unchanged. All right, you got one guy calling for a full 1% rate hike. You got two guys calling for a 50 basis point rate hike, and then you got another guy out there who's on the opposite end of the spectrum, and he's calling for further quantitative easing. Shouldn't surprise anybody that guy's actually American, but that's neither here nor there. So that's kind of what we're looking at in the markets today. We've definitely got risk-taking going on. Gold came back, touched over 1,500, and we're sitting right there. Silver's up to $44. That's a high, nominal high since 1980. So we're looking at that. Oil's pushed back. It's up pretty good to 109 and change. We had stocks up higher in Asia overnight on a good clip, and also in Europe as well. So we've got definite risk-taking going on. Obviously, the theme here is continued dollar weakness. People aren't certain where their money should be going at this point, but it's the kind of thing where it's becoming more and more clear. Hey, dollar's not the answer, and dollar continues to sell off. So let the inflation hawks continue to rattle the cage and say, hey, we've got all this inflation. Right now, it appears as though people are so worried about the economy and what growth is doing that they're willing to turn a blind eye towards inflation. So that's the kind of thing where if all of a sudden the public perception is that, wait a second, we're going to get inflation and it's going to happen, they're going to let this happen, well, perhaps that's going to have the exact intended effect, and people are going to start buying things now because they're going to be afraid that it goes up later, which in turn is going to help the economy. All right, so that's kind of what the story is now. They're trying to basically inflate away this bubble and sort of inflate away some of this debt. I mean, people are worried about about a U.S. default. Well, listen, the U.S. is going to keep printing more money, and eventually, they're going to be returning their debt obligations to people and funding money. So, anyway, we're looking at dollar weakness. I don't see anything on the docket here that's going to potentially change. The mood here later this morning. We have existing home sales due out in the U.S. Those good or bad, I don't think it's going to have that big of an effect. So that's what we're looking at today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.